Hello students, in the last video we have completed all the methods of goodwill, right? In this video I am going to start with the accounting treatment of goodwill in admission of partner. Okay, so why there was a need of valuation of goodwill we have already understood, because of reconstitution like admission, retirement, death or change in profit sharing ratio. I am going to cover each one of them in one video, with starting with admission of partner. Let's start. Okay, so as I told you, why there was a need of valuation of goodwill in case of admission. Firstly, what do you mean by admission of partner? For example, there are two person A and B who are doing the business, right? If C wants to join in, it is result of what? Admission of partner, because A and B were already doing the business. Now, what the profit they were earning, let's say for 10,000 rupees, they were sharing that profit among themselves only, like A 5,000 or B 5,000. Let's take the example. But as and when C enters, what will happen? As and when he enters, we have to give him some share of profit, right? There was a need of calculation of goodwill due to that reason. So when a new partner get admitted, certain adjustments are to be done into the accounts. Chiefly, this is because this new partner, in our case, who is the new partner? C, is acquiring the share of profit of the firm, because of which all partners stand to lose. Me and A, right? A and B, we both were sharing the profit equally, 5,000 each. Now, since C is coming, I have to give the share of profit to C as well. I will get the 10,000 rupees, 5,000 out of it? Answer is no. So that is the reason, to compensate the person who are already doing the business, compensate the partners who are doing the business, this concept of valuation of goodwill in admission of partner came into being. Right? So, next thing, we'll take a small simple example to bring more clarity. Suppose like we have a partner named A and B, 3:2 is their profit sharing ratio initially. And they were getting total profit of 20,000 of the firm. Now, as per 3:2 ratio, they are earning how much? A will earn 12,000 profit, B will earn 8,000 rupees profit. This is clear. This is very much clear. Now, they are admitting C. What they are giving him? But obviously, they have to give them some part of the share. They are giving them 1/4 share of the profit. Then, out of 20,000, if you give 1/4 share to C, that is rupees 5,000, what is the balance? Out of 20,000, 5,000 is given away to C, remains 15,000 rupees for A and B, right? Initially, A and B were earning how much? 12,000 and 8,000. Now, since C has admitted the profit sharing ratio, the profit which they are going to get will be less, right? So, to overcome this ratio, for example, they are getting 9,000 and 6,000 against 12,000 and 8,000. So, there is a loss to A by rupees 3,000. There is a loss to B by rupees 2,000, right? C need to compensate this losses by way of bringing in the goodwill in the firm when he is getting admitted. This is basically the concept why we are valuing the goodwill in case of admission of partner, to compensate whom? The old partners, right? The problem of compensation is but of is the chief problem, okay, in dealing with the admission. So to tackle this problem, goodwill came into being. This is the only thing you need to know conceptually. There's no theory question asked, but you should know concept, right? Okay, now how do I treat it? Accounting treatment, at the end, the question is going to come, how will you pass the journal entry? How will you show it in your books? So the accounting treatment in case of admission of partners are same way like methods. I will be giving you the methods steps. It will become easier for you to grasp, right? So step number one. In the step number one, I am going to calculate the goodwill of the firm. Now the last 5 videos where I have taught you the valuation of goodwill, you have to use them, right? It will be specified in the question which methods to use. So if you remember, we have completed which method? The first method, average profit method. Then super profit method. Yes. After which annuity method. And the last one was capitalization method. Right? So to value the goodwill, we will be using any of this method which will be specified in the question to calculate what goodwill of the firm. Step number 1. Let's move to step number 2. In step number 2, I am going to calculate the share of the new partner. Now share of the new partner means what? Let's say by using the methods, I got a goodwill of rupees 1 lakh. Okay, I got a goodwill amount rupees 1 lakh. Whatever share this new partner is going to get, let's say he's getting 1/4 share. He has to bring in that money. He won't bring the entire goodwill amount. No, he will get only the share he is getting. So finally, he will be getting rupees 25,000 as his share of goodwill. Step number 3. Under step number 3, now this 25,000 has to be given to whom? The old partners. Which partner who have sacrificed? Right? The old partners are only going to sacrifice. To calculate sacrifice, there is a formula. What is the formula? Old ratio. What is old ratio? It is the ratio which was there before C has admitted minus the new ratio. Okay. And in absence of information, if you don't have any information about new ratio, old ratio will be always be there. But if new ratio is not given, in that case, sacrifice ratio is treated as what? The old ratio. Okay. In that case, sacrifice ratio will be equal to the old ratio. This you have to assume and you have to write it as a part of working note. Then only you will get a marks. Step number 4, finally I am going to pass the journal entry. Now I know how much the new partner is going to get and how will I distribute this amount to the sacrificing partner. So he is going to get in 2 ways. Firstly, he may get this goodwill in form of cash. Right? So whenever cash comes in, we debit the cash bank account. For what purpose he is getting the goodwill? Premium on goodwill account. And this goodwill has to be distributed to whom? The sacrificing partner, or we can say the old partners. In which ratio? Let's say we have A and B. In which ratio? As per the formula, old ratio minus new ratio, or if the information is not given, as per old ratio only. And in case there is a second method also, sometime it may happen that new partner is unable to get the goodwill in cash. So he has to compensate. There is no compensation for him that if he don't bring the goodwill, it is fine. He has to get it. Okay. So we can create a liability on him by opening his current account. Okay. And crediting the sacrificing partner's account in the same lines as we did in the journal entry where he bought the money in cash. Okay, so these were the 4 simple steps in which you can calculate what goodwill and pass the journal entry. Now we will solve a sum with the first method when he brings the goodwill in cash. Let's start. So, illustration number 1, when the partner brings in the goodwill in form of cash or kind. Kind in a sense in form of assets like machinery or something. Okay, let's read. A, B and C are the 3 partners. Their profit sharing ratio is 2:2:1. This is their old profit sharing ratio. Yes. They admitted whom? D. D is a new partner. For how much share? 1/5 share. Okay. Now D is going to get 10,000 rupees as premium on goodwill. Now, if you remember the steps for calculation of this accounting treatment for admission of partners, step 1 was what? Valuation of goodwill. Now, in this case, I am not required to go to step 1. Again, the step number 2 was what? To calculate the share of the new partner. In this case, the share of the new partner, the form of goodwill he has to bring, that is rupees 10,000 is given to you. So, can I say step number 2, that is 10,000 rupees is my answer. Under step number 3, I need to calculate sacrifice ratio. If you see in this question, I have information of old profit sharing ratio. I have information of new partners, new share. But I don't have any information about new profit sharing ratio. So in absence of information, we have to assume the old ratio as my sacrifice ratio. So can I say 2:2:1 is my sacrifice ratio, in which this 10,000 rupees will be distributed among the sacrificing partner, that is A, B and C. Let's solve the sum. Step number 1 was what? Under step number 1, I need to calculate what? I need to calculate the goodwill of the firm. Now in this case, I am not required to calculate, since step number 2, share of the new partner bringing in the goodwill, that is rupees 10,000, is given to me, right? So I can directly move towards the step number 3. Under step number 3, I need to calculate sacrifice ratio. Now in this question, I am having no information about new profit sharing ratio. I am only having the information about old profit sharing ratio and new partners share. So in absence of information, we have to treat old ratio as my sacrifice ratio. For that, you need to mention it. In absence of information, yes, old ratio will be sacrifice ratio. Okay, you need to mention this, otherwise your marks will get deducted, that is 2:2:1. Under step number 4, finally I am going to pass the journal entry. First journal entry, when the new partner gets the goodwill in cash, we pass the entry as bank account debit to what he is getting in premium on goodwill. It is not the purchased goodwill. If it is a purchased goodwill, it goes and sits in the asset side. Okay, it is something self-generated goodwill. So, to what? Premium on goodwill. How much he has bought in? He has bought in rupees 10,000, right? Now this rupees 10,000 has to be distributed among whom? The sacrificing partner. Sacrificing ratio, right? This amount of rupees 10,000 will be distributed among the sacrificing partner in sacrificing ratio. In absence of information, it is the old ratio, that is 2:2:1. So my second journal entry will be what? This premium on goodwill, right, will get debited. Yes, it will get debited. And who will get credited? A, B and C. All the three partners have sacrificed, and in absence of information, we are treating it as a fluctuating capital method. So their capital account will only get credited. Okay. So rupees 10,000, if I distribute among them in 2:2:1 ratio, what will be the answer? It is going to be 4,000 for A, 4,000 for B and rupees 2,000 for C. Simple, and the sum is over. Okay, now we will solve a sum when the new partner does not bring in the goodwill in form of cash. You are required to pass only one journal entry, right? Let's do it. So, we'll read the question carefully first. When new partner does not bring the goodwill in cash or kind, A and B are equal partner. Can I say their profit sharing ratio, their old profit sharing ratio is what? 1:1. 1/2 and 1/2. They wanted to take C as a third partner for 1/4 share. Okay. And for purpose of goodwill was valued as 1,20,000. Now, if you see, there is nothing mentioned in the question that this person C has bought something in cash. So, you have to assume that C has not bought the money in cash. Okay. They have given you what? Goodwill of the firm, that is rupees 1,20,000. So, let's solve it step by step. What was the step 1? I need value of goodwill. In my question, I have been readily given rupees 1,20,000 as what? Value of goodwill. Second, I need to calculate the share which the new partner has to get. How it is calculated? Goodwill of the firm multiplied by new partner's share. So, goodwill of the firm is 1,20,000 and the share he is getting in is how much? He is getting 1/4. So, 1/4 of 1,20,000 gives me 30,000 rupees as what? His share. He is not going to get the entire value of goodwill. He is only going to get his share. The third part, what it is? Third part is I need to calculate what? The sacrificing ratio. Now, again in this question, if you have noticed, I don't have something called new profit sharing ratio, right? If you don't have sacrificing ratio or any information about it, or new ratio is not given, we assume it to be the old ratio. Now in this question, my old ratio is what? Equal. Equal means what? 1:1. Lastly, you have to pass the journal entry, that is the actual accounting treatment task. In this case, the new partner C has failed to bring the goodwill because in the question they have not stated. So we assume the amount of rupees 30,000 is yet to be bought. But if you know, we have to compensate the old partners, correct? This 30,000 has to be credited. Since he has not bought the money, we have to open new partner's current account. Who is our new partner? C. So his account has to be debited by the 30,000 rupees amount, and who will get credited? The sacrificing partner. In our case, both the partners are sacrificing in the equal ratio. So A's capital account will get credited as well as B's capital account will get credited. Now in which ratio? It is sacrifice ratio always. And sacrifice ratio is not given. We assume the old ratio as my sacrifice ratio. So if we divide 30,000 equally, we get 15,000 rupees each as their what? Sacrificing the share of goodwill. Simple. So what was the difference? In that case, the person, the new partner has got in the goodwill. But in case of the second illustration, this person has failed to bought the goodwill. So we have to open his current account. Okay, so we have completed the accounting treatment of goodwill in case of admission of partner. In the next video, I am going to start the accounting treatment in case of change in profit sharing ratio. Till then, stay tuned. Thank you.